Ladies and gentlemen, please welcome to the stage the Editor-in-Chief for Business News at Sky News Arabia, Ms. Lubna Bouza, and her panelists.
Your Highnesses, Your Excellencies, ladies and gentlemen, hello and thank you for joining us. Our next session is going to focus on the confronting the global challenges. I would like to introduce our distinguished panelists. To my right, Mr. David Malpass, the President of the World Bank, and Mr. Jin Lichun, President and Chair of the Asian Infrastructure Investment Bank. Thank you, gentlemen, for making the time. My first question, and I think it's the question on everyone's mind in this room and in the world. The economic growth is slowing down. But the question here, are we heading to a crisis similar to that of 2008, and why? Mr. Malpass.
I think there are different challenges this time. In 2008, there had been a concentration in financial assets, securitized financial assets. This time around, there's slow growth. So if we look at the challenges, it's lack of investment, or not enough investment, not enough growth in economies such as in Europe. So that's a different stage for difficulties. It may be a big challenge. It might be a recession or some deeper slowdown, but I think it's a different characteristics than in 2008.
That's interesting. Let's hear from you, sir.
I fully agree with President Malpass. In 2008 or 2009, because of subprime mortgage meltdown, the financial sector meltdown, and the stock market was in a irrational exuberance. And if you look further on, in 1997, 1998, some of the East Asian countries were suffering from serious balance of payments problems without any policy actions to address this. That caused the major crisis. Now, the economies of many countries are slowing down. But slowing down does not mean there was something extraordinarily risky. But of course, some countries may be suffering from some of the problems because of the slowed down economy. They may have debt problems, but not the global-wide financial crisis.
If we are to list the headwinds facing the global economy nowadays, what would be your top three, your first three?
There may be more, but I'll list three. So one is trade uncertainty. One is Brexit and the effect in Europe with Europe's substantial slowdown. And then a third I'll mention is the frozen capital related to the negative bond yields. So there's a concentration of benefits through the bond market. The central banks are concentrating their stimulus through bond markets, which creates a very narrow focus of that stimulus. So that ends up being part of this slow investment rate that's going on around the world. It's captured in these very low-yielding bonds.
I'm going to go through all of them, but let me hear from Mr. Lichun as well.
I do not think it's possible to just identify three major causes for these special problems. I think Brexit is certainly a problem, but it's more or less limited to the European countries, right? Trade issues, yes, they are to a certain extent, but I see the efforts of some of the trading partners are trying to work them out. I think protectionism is something we need to keep in mind and try to work them out. So there are a host of probably macroeconomic situations, problems we need to look at. But all this is shifting, all this is changing.
Let's start with the trade war. The first phase of the trade deal appears almost ready. Do you think now that the two powers now are heading to a more balanced business relationship, and how will that impact the growth in the world?
I don't know what they're heading toward, but if there's a phase one deal, I think it's good for them to work together and to make some progress, and it can help with some of the uncertainty going on.
It's quite normal for trading partners to have some disputes, and it happened all of the times. But we should not regard these kind of disputes as trade wars. The problems can be resolved, and you may see I would say, pretty good result in the recent round of negotiation between China and the United States, and I hope this will go on. This is the first step forward, and people are certainly looking forward to see better results moving forward.
Mr. Malpass, you just mentioned in your first answer the complexities of the negative interest rate. As a World Bank president, how are you navigating through that? And do you think it's an opportunity? Because you spoke about it as if it is a challenge. But for you, is it an opportunity as well, or only a challenge?
Right now, I think it's a challenge. How it affects the developing world is low rates of investment, and it makes it and the global slowdown is a big challenge. And so the many developing countries are facing debt burdens that are going to be hard to sustain. Now, whether it low yields is an opportunity is if countries can create a good, attractive platform, being open for business. There is capital. There are large amounts of capital in the developed world. The challenge right now is that capital is being channeled into a very narrow group of bonds, the government bonds, the higher rated corporate bonds, and so that's ending up with a tremendous amount of inequality of opportunity going on around the world.
Now we'll come back to the debt sustainability, but before that, let's hear from you, Mr. Lechun, about the negative interest rate environment that we have now.
I agree with the President Malpass. I think this is an issue which quite a number of countries should pay attention to, and domestically, it's crucial to have very good macroeconomic policies put in place, and a very good cooperation between the monetary and the fiscal policies are key for a number of countries. But of course, it depends on the specific situations of any particular country, whether you resort to monetary policy or fiscal policy, it all depends.
Mr. Lechun, China has emerged lately as a major new financer, especially under the Belt and Road Initiative. This has raised concerns about debt sustainability and accusations that China is pursuing what they call the debt trap diplomacy. What are your thoughts on that?
For me?
Yes, sir.
You see, the Belt Road Initiative was proposed by China a couple of years ago, and the purpose is to improve economic cooperation through connectivity. But you see, the debt problems in numerous countries were accumulated over the years. And I don't think it's fair to put it down to the Belt Road Initiative. Indeed, to my knowledge, the purpose of the Belt Road Initiative is to improve the infrastructure investments. Infrastructure bottlenecks will be removed. That will pave the path for long-term development for so many countries. But we should learn from the history. For many countries, I think the issue is not whether you borrow the money from outside, it's how you spend the money you borrowed. Mm-hmm. How you spend the money, you spend it well or not. I think it's very much important. China, starting from 1980, borrowed substantially from outside, never ever had debt problems because China used the money judiciously. That's the key.
So no foundation to those critical comments?
I don't. You have to look at the data, whether the data problems suffered by some of the countries are due to excessive exposure to China or not. You need to look at the data, and the data will speak for themselves. And I don't think it is fair to say that.
Mr. Malpass, while debt problems are considered an issue pertaining to developing countries, but I think the 2008 crisis did reveal that those issues are also there in developed countries. As a World Bank, how do you help your clients achieve their development goals without creating a future debt problems?
I think Jen's point about what is invested in is important. So the challenge as debt is taken on is to have projects that make sense, investments that make sense for the people of the country. And so I think that it requires transparency of the debt. If the government is borrowing money, it needs to be transparent about what the terms are of the debt, what the quality of the project is going to be, and what the side aspects, meaning collateral, liens, there are clauses within the contracts, and that's a challenge that I think needs to evolve, because the debt burden has gone up so fast that the end result has been quite a few projects that aren't really what the people of the country needed.
So that's the government side, but as the World Bank and AIIB, if I may call it that way, what are you going to do to promote growth and that sustainability in developing and developed countries to avoid the mistakes of the past and really promote growth?
In developing countries, we want to have very good country programs, so that we work closely with the countries on what their plan is, and see that it's got growth as one of the goals, and higher living standards for all the people. So that means living standards both in terms of monetary, but also social and environmental aspects of their advancement, and building that in. For the developed countries, I think we have to look at this issue that I mentioned earlier, that the stimulus is being channeled through a very narrow lens of bonds. So the primary tool being used is the purchase of bonds with short-term financing, and that is not really providing the stimulus that's needed for the developed countries.
So following up on the developing countries, I think you took office with the intention to focus on having the individual countries do better, or what you call the breakthrough. Give us an update, a quick update before I move to Mr. Lichun.
So I work a lot with individual country programs. I'm just back from India, and so they're working on a range of reforms that would allow faster growth in India. For example, in their financial sector, it hasn't advanced as much. For example, we've been talking about bonds. They don't have a very deep capital market, and they could benefit from deepening that capital market, which would bring in a lot more foreign money and also Indian money, and apply it to good projects in India. So that's one example. And around the world, developing countries need specific reforms. In Kenya, we're working with the fertilizer sector, where there can be a better matching of the type of fertilizer, and the farmers have access to different kinds. So there's a whole range of ways that countries can grow faster.
Mr. Lichun, you have already 97 approved countries, although the bank is like only 4 years. And I think the only two missing from the big economies, Japan and the US. Tell me what you do to promote growth and debt sustainability to your clients and your members.
First of all, in spite of the membership, our bank, AIIB, to debt sustainability of our borrowing countries. Because if they do well, we do well. And our purpose is to help them to promote broad-based economic and social development. Now, the dilemma is, of course, if some country is already in high, very debt ratio, are they going to continue to borrow or not? It's a dilemma. But we in the multilateral development families need to help them. So one of the, I think, solution is to help the government to prioritize their development programs. Some projects should be postponed somewhat, and some other projects should be done. So we work together to help these countries to prioritize, put the money to the most important areas for any time zone. So all the projects we finance would generate incomes when they complete. So I often said, getting a project done on schedule and get them done, completed on schedule is crucial. And of course, we set 3 basic requirements for any financing we may consider. And I think we also, in this regard, work very closely with the World Bank. First is financial sustainability. The last thing MDBs will do is to see the money we gave them would create problems for them. Okay. Financial sustainability, environmental friendly, and socially responsible. Now, if you prepare such a project by the 3 standards, you have no worries about the debt problems.
Speaking of multilateralism, Mr. Malpass, back in November 2017, you said that one of the main challenges to the US economy and the global economy is multilateralism that involves expansion of multilateral banks. There must be a process to focus, prune, and streamline so those organizations make sense. If you are given the chance now to change the mandate of the World Bank, what would you change?
After that quote, there was a new capital increase negotiated for the World Bank, which focused the energy of the bank in ways that the shareholders agreed to and added capital. And we're also going through an important process now with IDA 19. That's a replenishment of part of the World Bank's funding, and so that gives a chance for the bank to demonstrate its focus, its cost effectiveness, its ability to really have an impact on countries. So I don't think we need a change in, what did you call it? In the mandate. In the mandate. We have that in a way that came through in 2018 and is now coming through in 2019. The mandate is pretty clear, and the job is to do it well and to do it in a way that really helps countries get to their next level of development. It turns out that's the hard part. The countries, the problems in their policies are embedded. And so in order to really change the policies takes a concerted effort in the country, and we can help with that sometimes.
I think we still have time for more questions. Mr. Lichun, do you think the US dollar will continue as the reserve currency of the world, or we will see the yuan really emerge to be an alternative?
I believe the US economy will remain the biggest economy, and even China's economy will go up. You have 2 major economies in this world. Their cooperation will be crucial for global peace and security. Now, with regard to US economy, US dollar, obviously US dollar will remain the major reserve currency. But with the rise of China and maybe other countries, so some other currencies will also play a role, but this is not an alternative.
Mm-hmm. Mr. Malpass.
I want to take an opportunity to talk about digital in general and technology advance. So I think that the dollar will remain the reserve currency and the reserve currency. But I think there's rapid changes going on in the way digital currency works, and it enables lots of advances for people because it allows the process of transaction costs coming down dramatically. If you think back, a challenge for poor people throughout time has been how to get enough currency to move out of the barter economy, and we're now moving to another stage where they can hold money on a digital card. Women can hold money. That's very important because in the past it could get taken away physically.
Yes.
And so it gives access to new businesses that didn't have access to, or an ability to have access to money. So I think we should take note of that. And then I also want to mention the opportunity through technology into the education system. We have these two big challenges of growth and education of young people at a time when the internet is coming on stream and able to help teach people and help provide digital money that India now has 1 billion households connected through cell phones to the outside world. That's a gigantic change from the past.
But we have to differentiate here between cryptocurrencies and digital currencies, right? What do you think the future of cryptocurrencies, though?
I don't have so much comment on that. I think sound money comes in lots of different varieties, and right now the dollar is sound money. The euro, more or less, is sound money, and the Chinese currency has been sound. And so the challenge more, and of course the others, there are several sound stores of value in the world. So I'm more interested in how do you have systems that lower the transaction cost to the point where poor countries, poor people have full access to money, because that empowers them.
And inclusion, of course.
And creates inclusion for women, for small businesses, and for new entrants. One of the hardest parts in the past has been if you're setting up a new business, you don't have access to money, to the raw material that you really need. And so by having digital currencies, I think it gives much better inclusion.
Mr. Lichun.
Well, I think it's very hard to predict what's going to happen in the digital world, because every second, every minute would bring you something new. And I basically agree with David with regard to the roles to be played by the traditional currency and probably the cryptocurrency. But you see, the way we spend the money is very much different. It's very much different, and that I would say would probably go on for quite some time. And I think the fiat money issued by the sovereign governments will remain the major currency for the global economies, and that's more stable in my view.
And on that note, we will wrap up.
Okay.
Thank you very much, Mr. David Malpass, the President of the World Bank, and Mr. John Likun, the President and Chair of Asian Infrastructure Investment Bank.